We're speaking with Leo Haviland right after the Democratic and Republican conventions. It's August 1st, 2016. Leo, listening to the Democratic convention, it sounds like the American economy is in terrific shape. Listening to the Republican convention a week earlier, it sounds like everything's terrible, but it could be made better, perhaps even great, with some new policies. How good or bad is the U.S. economy really?
One thing we have to focus on, Scott, is the amount of populist language and enthusiasm there is. The rise of Sanders and the success of Trump both indicate that the economic situation in the United States is not great. Measurable dimensions beyond the political sphere, however, also suggest a mixed picture at best. There's been some economic growth. Unemployment is down. However, economic inequality is dramatically high. Concerns about social and economic mobility great. And fairness concerns within the economic sphere are widespread. Add to that, Scott, is the debt situation in the United States, although not as dreadful as it was at the close or height of the global economic crisis, still remains severe. Much of the improvement in the consumer situation has simply shifted to a greater U.S. government debt.
Mm-hmm. Are there things that President Obama could have done that would have avoided or reduced the severity of the situation you've just described?
To be fair to the president, he inherited a difficult economic situation, and the Congress, particularly the Republican branch, did not do a great deal to accommodate him in many respects. However, some of the choices that the president elected to focus on during his two terms, such as health care, the Iran nuclear situation, and other matters, would indicate that had he focused more on certain economic matters, perhaps the outcome for the country as a whole could have been marginally improved. He spent his political capital on other factors.
Leo, with the United Kingdom leaving the European Union and some other countries within the European Union also talking about having a similar vote, or in the case of some of the Eastern countries, actually pursuing refugee policies that transgress European Union rules. It looks like the European Union may have reached its zenith, and certainly we have this upsurge in nationalism over here in the U.S. So we're looking at an increase in nationalism that we haven't seen since the end of World War II. How is this going to affect the marketplaces that you cover? I know there's a list of them. You cover interest rates, you cover currencies, you cover share markets, you cover the energy market. Where do you see impact from this upsurge in nationalism?
In the short term, Scott, what we will continue to see is an effort by the central banks, the Federal Reserve, the ECB, and others, to contain the nationalism. So that means status quo. So there probably will not be dramatic changes relative to what we've seen in the past few months. The US dollar will remain under its first quarter 2016 peak. Worldwide stocks probably will not collapse. Interest rates will remain depressed, and commodities, which are trading somewhat off on their own because of the supply demand, say of oil, will not rally dramatically. However, to the extent that populists represent change, and to the extent that some of this change will represent increased nationalism and some decline in popularity of the free market and globalization mantras of the post-Second World War period, that change means change in these market trends. So should Trump or other significant nationalists gain power, that arguably says stocks will go down, interest rates will go up, the US dollar will weaken.
It's no surprise that Leo Haviland keeps a very close eye on China. After all, it's a quarter of the world, 207 countries, but just one of them is 25% of the world's population, and two of them, India is the other one, 50% of the world's population. Let's talk about the powerful and growing Chinese economy. What do we see happening there, and what should we look forward to?
China's growth still remains impressive. Many countries around the world indeed envy its current level. However, China has slowed down some in the past couple of years. From growth that had exceeded 9 or 10%, it's now drifted down to somewhere in the mid 6%, perhaps even lower. The sluggishness of the Chinese economy, Scott, we also see by the effort of that country to depreciate its currency, not simply against the US dollar, but on an effective exchange rate basis. If things were going great, why would they be doing that? But more importantly, we need to look at China in the same way that we're looking at the United States. What's going on politically, and how does that act as a sign for the economic situation in China? That is ominous. What we've seen is quarrels with the Chinese and neighboring nations over islands and territory. We see an effort by the Communist Party to assert greater control over the internet and political conversations. Also, we see, of course, the fierce anti-corruption campaign, which, when you add all that and similar events together, it says if things were so great, why would they be making these political responses around the...
Right. Do you think there's any chance that China can beef up its growth in the midterm by focusing on its domestic economy rather than being an export-oriented economy?
Given the experience in the United States and other nations with deficit spending, they certainly could. They, however, have already spent many billions of dollars on improving their infrastructure, so one wonders how much actual good that will accomplish. Also, we need to look now at, say, indicators like their electricity production, which for the past year is up only 1%. So though they have plenty of reserves, and although there are many who say China could move to a consumption-based economy and a more service-based economy, the IMF and others say that, that seems to be an effort, and they're speaking of a potential new normal for China, to be rather an exercise in wishful thinking.
Wishful thinking?
Yes.